Ever wondered how mutual funds work? Well, to put it simply, a mutual fund is an investment vehicle that brings together money from a multitude of investors. This pooled capital is then used to purchase a diversified range of stocks, bonds, or other types of securities. And who manages these funds? It's none other than professional portfolio managers or investment companies. One of the defining features of mutual funds is diversification. By pooling resources from many investors, mutual funds can afford to buy a wider array of securities. This reduces the risk associated with investing in individual stocks or bonds. Another key feature is professional management. The investment decisions for the fund are made by experienced portfolio managers. These professionals analyze the market, select securities, and strive to achieve the fund's stated objectives. This level of expertise can be particularly attractive to investors who may not have the time or knowledge to manage their own investments. Liquidity is another attractive feature of mutual funds. Shares can typically be bought or sold on any business day at the fund's net asset value, or NAV, which is the per-share market value of all the fund's holdings. Mutual funds also offer affordability. They allow investors to participate in the financial markets with relatively small amounts of money. Investors can buy shares of a mutual fund at the fund's current NAV. There's also a great deal of variety to be found in mutual funds. They come in many shapes and sizes, catering to different investment objectives. There are equity funds that invest in stocks, bond funds that invest in bonds, money market funds that invest in short-term, low-risk securities, and hybrid funds that blend stocks and bonds. In addition, there are specialty funds that focus on specific sectors or asset classes. Many mutual funds also distribute income in the form of dividends and capital gains to their shareholders. These distributions can provide investors with regular income and potential tax advantages. Furthermore, mutual funds are subject to regulation by government agencies, which serves to provide a degree of investor protection. However, it's crucial to bear in mind that mutual funds charge fees and expenses. These charges, which include management fees and operating expenses, can impact the overall returns for investors. The returns on mutual funds are dependent on the performance of the underlying securities in the fund's portfolio. Investors should carefully consider their investment goals, risk tolerance, and the specific mutual fund's investment objectives and strategies before investing. There is a broad spectrum of mutual funds available, each designed to suit various investment needs and preferences.